Ford earnings are due out later today. America's second largest car maker set to report its biggest third quarter profit in its 107-year history. Net income is estimated at almost $1.4 billion, surpassing the previous record of $1 billion it earned back in 1997. The boost in the bottom line comes as Ford rolls out several new models. Chief Executive Officer Alan Mulally is credited with Ford's recent success. Mulally joined the car maker from Boeing in 2006 after helping that company bounce back to profitability. Ford is the only U.S. automaker to survive the economic crisis without government aid, and so far this year its share price is up a massive 40%. But the picture isn't so rosy for Ford Europe. Sales here fell by more than 8% between January and September, with market share putting the brakes by a similar amount. And joining me now to talk about what Ford can expect and the wider car industry, Arndt Ellinghorst, Head of Automotive Research from Credit Suisse. Arndt, good morning. Thanks for joining us.
Good morning.
I mean, it's incredible, isn't it, that Ford's going to announce record earnings today. It seems only yesterday that the U.S. auto industry was on its knees.
Well, I mean, really, Ford has had a really massive recovery. Indeed, as you mentioned, the only of the big three from Detroit without government support, avoiding big bankruptcy cases. And the recovery really comes from their good performance in the U.S. and the restructuring efforts. Elsewhere in the world, the picture is not as great. As you mentioned, the European market is still a problem for Ford. Yeah,
I mean, talk to me about the European market. What are its particular issues that it's facing in Europe?
Well, the European market currently, you know, if you look at it, 50% comes from corporate customers, 50% from private customers. And all the scrapping programs really were facing the private customers, or the ones buying cheap cars. And that market, that's the market where Ford is selling most of their cars. This market is a problem right now in terms of volume and pricing, and that market is only due to recover maybe from the second half of next year.
Generally, though, Arndt, I mean, talking about the wider car industry, I mean, it's looking like a good third quarter, isn't it? The message in the last week from Volkswagen, from Peugeot Citroën, it's been a stellar quarter, hasn't it?
Well, the quarter's been less bad than many of us feared initially when we started the year. Volume declines have been, you know, single digit, not really big double digits. But if you really listen to the language of the companies, it's far from good. We talk about tiny margins still. We talk about avoiding cash burn. And also some of them already mentioned that next year might not be great. So you get the big positive surprises and strong earnings really from the companies like VW, which have a strong exporting business.
It's all happening, of course, in China, isn't it, Arndt? I mean, the numbers there are incredible. If you look at Daimler and BMW, I mean, sales in the quarter almost well up 100% in the region. I mean, is this sustainable?
Well, I mean, also there you got to differentiate between the mass market of the business, where companies like VW are active. The importers there are having a great, fantastic time. You can sell an S-Class in China, net of all duties and taxes, for 125,000 euros versus only 75,000 in Europe. I mean, these are extra super normal profits, especially for premium makers. Since these guys are relatively new to the Chinese market, we do believe that that development is sustainable. The development of the mass market, especially for domestic players in China, might not be as sustainable as we've seen it this year.
Thanks, Arndt Ellinghorst there from Credit Suisse.